Hey everyone, welcome back to another episode of my M1 Finance portfolio series where I'm attempting to reach a $100,000 net worth in this platform, M1 Finance. And if you've been following along in the series, you might notice that this balance is quite a bit higher than last month's. And that's because I have transferred quite a bit of new cash over into this portfolio, over from a different portfolio I had actually also on M1 Finance that was mainly made up of a lot of ETFs and a good amount of commodity stocks as well. There's still a little bit of money left there, but I've transferred at least a few thousand. I forget the exact number. And I actually have another 6,000 or so that's going to be coming in the coming days from that same account. So that other account, with all those ETFs and commodities, will be being shut down and moved into this portfolio. And this portfolio is really part of my concentrated, value-oriented investing strategy, as opposed to the very broadly diversified strategy I had before. Now, this isn't to say that I no longer have any ETFs in my portfolio. I mean, even within this one, I have a bunch of different commodities in here: gold miners, copper, uranium. So these are ETFs as well, and there's multiple companies in there. Within this Berkshire holding, there's 100 different holdings, or however many are in Berkshire exactly. So there's some diversification built into the portfolio already. But also in my retirement accounts, I have plenty of broad international and domestic US-based ETFs and broad index funds. So I still have plenty of diversification there, and that can be sort of my safety net portfolio in the event that I don't turn out to be a savvy investor, and instead I'll have this sort of index fund market return oriented portfolio to fall back on. Meanwhile, I'm trying to concentrate my investments into the ones that I have the most conviction behind. And that goes for my real estate portfolio as well as this stock portfolio. And I've narrowed down my portfolio to just under 20 holdings. At the moment, I have 18 in here, and I wouldn't imagine it's going to get much lower than this. Maybe if I move some of the money out of commodities or this metals section and move it into more of my concentrated value positions that we have here. If you guys want to see this whole portfolio in greater detail, you can go check out the description below. I always include a link to this current episode's portfolio. If you have an M1 Finance account yourself, you can actually copy over that portfolio. It's not financial advice by any means, but if you happen to like the holdings in this portfolio, you want to adjust it as you see fit, you can do that. It's a nice feature with M1 Finance among some other nice user-friendly features that M1 Finance does offer. I've always got my affiliate link down there in the description, so I'd very much appreciate it if you try that out as well. But anyways, over the last almost 2 years of having this portfolio open, I've gone from having nearly 100 holdings within this portfolio, many of them broad index funds, ETF type holdings, and I've brought it all the way down to the 18 holdings I have now. And like I was saying, I probably am not going to go much lower than that, but I think long term, I could very well see myself having maybe 25 to 30 holdings as sort of a quote unquote mature portfolio, or I'm not really looking to add new positions, more or less just adding or subtracting from existing ones, depending on the situation. Of course, fundamentals can always change, but that's kind of how I see this going in the future. I'm probably going to be adding holdings here and there as I continue to fund this account with new money from my salary, because right now that does make a huge difference. It's not a massive $1 million, $2 million portfolio. We're talking about less than $100,000 at the moment. So for now, I think it makes sense to just continue looking for new holdings, being much more aggressive and I guess proactive, maybe that's the right word for it, in trying to build out this portfolio. And I'm going to get into some of the stocks that I'm very interested in buying, including one that I actually recently did buy and add to this portfolio. You might have noticed it when I was actually scrolling through it just now. But I do want to remind everyone that this portfolio for me does serve as collateral for eventual real estate deals. If I want to take out some margin to fund a down payment or a rehab, that's really the main purpose of this portfolio while I'm attempting to build up my real estate portfolio as well. So meanwhile, I'm not going to have a ton of cash because a lot of it is going to be invested into this portfolio right here. And then if I want to take out money to then go buy real estate, I can do something like a margin loan in the short term. And then my new salary that comes in will then pay down that margin, which is exactly what I did with the place I'm filming from right now. That's how I funded my down payment. I took out some margin. There's risk with margin. I'm not saying you should go do that, but that's how I want to use this portfolio in the long term. It's a more efficient way, perhaps, even if it adds a little bit of risk, to actually keep my money invested and yet still keeping it liquid to where I could keep investing in things like real estate. Plus, it is fun building this portfolio and learning things as I go along in the process. But anyways, I want to share 3 stocks I'm very interested in buying, including one that I just bought, and kind of go over my initial thesis before I start to do some more research into these companies. I do plan on doing more thorough videos on each of these companies in the near future, so be sure to subscribe so you don't miss those. I'll go into much more of the financials here. This is going to be a little bit more high level, kind of giving you the initial investment thesis, as well as kind of some of the advantages that really jump off the page when you first look at these investments. And the first one of those is actually Foot Locker, the shoe retailer based in the US. It's currently trading for 8 times its free cash flow over the last year, and its price to earnings ratio is only half of its 5-year average, and its 5-year average has been around 10 or 11. Right now, it's about 5.5. So you would think you might see some upward multiple expansion as long as their earnings stay the same. Of course, retail does get a very bad rap, but Foot Locker has continued to maintain pretty slow and steady growth, which isn't really a bad thing. You might love to see some explosive growth, but sustainable, slow, steady growth, predictable cash flows are something that I would want to look for in an investment. And Foot Locker surprisingly seems to have that, despite being in the ever frowned upon retail sector when you're not named Amazon or Alibaba or one of the e-commerce giants. But Foot Locker has a lot going for it right now. So I definitely want to take a much closer look at this, since right now the baseline metrics seem pretty favorable and I'm very interested in it. So definitely worth further research. The next one on the list for me is Sleep Number, which is the custom mattress, or it's not really custom, but it's a mattress company where you can change kind of the levels on the mattresses that you're using, make it firmer or softer, and you can have like multiple types of layouts on the same mattress. So it's a pretty neat product. I've never actually used it myself, but they've been doing quite well over the past few years, especially in this last year. They had a very good year, and they've been doing super aggressive buybacks. But before I get to that, they're trading at 8.5 times free cash flow right now, their current free cash flow. Their price to earnings is also half of its 5-year average, much like Foot Locker, and they have very strong cash flow. One thing about Sleep Number that does concern me a bit is they do seem to have quite a bit of debt, but they do have a lot of cash flow coming in at the same time, so that makes it a little bit less worrisome, but something to keep an eye on. It's a very simple to understand business. It's selling mattresses in the same way that Foot Locker, very simple to understand business. It sells shoes. So that's easy to get your head around, and it's just taking a look at these numbers and trying to project out what I would expect Sleep Number's growth to be. And if you can get it at steep enough of a discount with conservative growth assumptions, then you don't really need that much to really happen for your investment to play out over the long term, one would think, as long as all goes decently well, not even spectacularly, again, if you get it at a good enough price. And it seems to be close, based on my very initial calculations, it seems to be close to what I would want my buy target to be. Yours might be very different because, again, it depends on your assumptions. And one thing I actually just learned while preparing for this video is that Sleep Number, I thought it was a very new company, kind of more in the e-commerce space, but really they've been around since the 1980s. So it's not as though it's a new company. That should help for some of the predictability with the business, but that's not to say that we should take the future for granted by just relying completely on the past. The environment is always changing, and you got to change with the times, and ideally get ahead of the times when you're innovating as a business. But again, it's a simple business. It's selling mattresses. Other people can do this too, so I'd be a little bit worried there. I'd want to look maybe into their intellectual property perhaps, as well as their brand loyalty. That would be something I'd be concerned about when doing some more research on this holding. I shouldn't say holding yet because it's not actually a holding, but this next one is a new holding, and that is Smith & Wesson. Yes, the American gun company. Now, I didn't open up a huge position here. I really still need to do some more research before I put any more money towards it. I put a few grand in. It's less than 5% of the portfolio. But Smith & Wesson, like many gun companies in the US, had a spectacular year last year, and they've capitalized on that success, and they've paid off all of their long-term debt. They did some buybacks, and they seem to be taking advantage of the position they're in, and they're trading at 3.5 times their current free cash flow, but you could easily say that their current free cash flow is totally out of whack. It's not going to stay up at those levels, which I think is totally fair. But even so, the price to earnings is trading at a third of its 5-year average. And if you were to kind of discount it from there, it still seems like it could be pretty cheap, at least in my view. And as long as they can capitalize on their good position and continue to move forward. I'm not a huge gun guy, but I know they've developed a new shotgun, which is something they've never done before. So that could be a new market to get into. I do want to learn quite a bit more about the gun industry in the US. I've only kind of known a little bit about it tangentially, but I think it's an interesting sort of thing because on the one hand, there's the obvious controversy that guns are dangerous. So you got to take that into account. There's always the regulatory risk and the very complex regulatory environment in the US where you have the Constitution that says that there's a right to bear arms, but then there's many state restrictions against it. There's federal restrictions against it. And there's always the threat that things will change. So it's a very controversial industry because of that. But there are many people who very much enjoy owning guns and they will continue to buy them. And there's always demand from things like police forces, military perhaps. So you have some of that element there too. There are lots of companies that sell dangerous things and people buy them voluntarily, and as long as they're used responsibly, they can still be okay. I get it, guns are significantly more dangerous than many other products that are sold on the market, but just something to keep in mind. It's not as though just because something is controversial doesn't mean that you should completely overlook it. Again, if you have your own personal moral objections to it, then obviously don't invest in it, move on to something else. There are thousands of opportunities out there to look at. This is one that caught my eye just because, first off, the numbers seemed really strong, at least from my preliminary research. And I definitely want to learn more about this industry, different avenues for growth that Smith & Wesson might have, and maybe there are some different opportunities that I can learn about in this industry. But anyways, I did open a small position here. Again, I don't know if I'll add much more since they are kind of taking advantage of what seems like a fluke here. So I'd want to discount that appropriately before I really get aggressive, if I do at all, in adding to this position, or maybe I'll sell it off very soon if I find something that I really don't like. But I think on the surface, it looks good so far, at least for my personal criteria. Now, if you guys actually want to see my entire portfolio, not just the stock portfolio, I do a monthly net worth series on the first of every month. And in that series, I always include a link in the description to those videos that shows my entire portfolio, whether it be my stocks, my retirement accounts, my real estate holdings, my debts and assets. So it shows all of that, and you can see where all my money is and see kind of how I'm diversified or not diversified, and see where maybe the overarching risk of my portfolio is. Right now, most of the risk in my portfolio is in real estate because that's where I have pretty much all of the debt, and that's where the greatest asset value is. But anyways, if you guys want to check that out and see my total allocation, definitely go check out my net worth series, the Road to $1 Million in net worth series that I do every single month. But otherwise, if you guys like this video, please like it, since that would help the channel out a lot. And if you want to make sure you don't miss future episodes of this series, be sure to subscribe. I also put out new videos every single week and wouldn't want you guys to miss out on those either. And check out those affiliate links in the description below. But until next time, take care.